Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar index hold steady at these levels. If we take a look at the euro, it's 1778. It has made it up to 1800 today, so it is about 22 pips off the highs. We'll take a look here with cable. Still a little bit higher here. You see that? And of course, euro dollar. Apparently, we were a little bit higher earlier. Very nice run yesterday, but we did come into our resistance, 1787. Poked its head a little bit above that and closed just a hair or right at it. And it looks like we poked up here to 1800. And quickly with the Aussie dollar. A little bit of a give today. After trying to continue to make that push higher yesterday. We did see equities rotate higher in the past session. We'll take a look at that. Here's the Nasdaq on the 5-minute chart. We did make it up to that 14.9. I think I posted that one also in the chat. I know yesterday I put it 11.422, which we did take a pause, and then I posted that for next area that they would go to as we got later on in the day. You can see that here in the pink line. We'll expand that so you can see that closer. So it looks like they went right for that 11.4900 a little bit earlier at the opening of Europe, and since we've gone and pulled back, but not a whole lot. I mean, we've paired back, but we're not seeing any this right board might be more aggressive action. When we look at the 5-minute chart, you can see here we pushed higher. There wasn't anything. Well, I guess you could look at this and say that it was basically a dark cloud cover. We are pushing the lows here, but you can see here, once we dip down here at 437, it's been kind of quiet right now. Once we got down here, and when I look at the 1-minute chart, there wasn't anything big that happened at 11.4900. Like I said, we're pushing a little bit lower. We may make a run toward, maybe eventually towards this 2-day VWAP. Like I said, I wasn't even awake when I saw this, so I was like, this is about when I came in. So we already made the move. I'm like, well, I'm not gonna sell it here. 40 handles off the high. I'll just wait, and maybe it'll just be quiet, and we'll see what happens. The preferable option is going to be to pick it up on the dips, probably right in here, which would be 11.392 or 393, which could coincide with the 2-day VWAP at 11.400. Like I said, when I came in, we were about right in here, I think. So it wasn't a whole lot right here. We already dropped down to the 40, so we just sat here now. We just took a quick little dip here. Taking a look at economic data, we did get German industrial orders, came in a little bit firmer, and then we do have PMI at the bottom of the hour, UK. It's not going to be manufacturing, just, I guess I'm going to call it consumer services? No, construction, sorry, construction. I don't know why I was okay. They weren't going to be services. Construction PMI at the bottom of the hour. Then looks like we get dairy prices. We're seeing a further dip here. I can see here that the S&Ps are at their 2-day VWAP right now. right here. See that? We're already at the 2-day VWAP, or just about 33.80. And we've seen a good little jump here. Look at the Nasdaq. See this big volume pop? Not huge, but decent sized volume pop right here. So it's coinciding at the same time that the S&Ps are coming into their VWAP. And you can see the 2-day VWAP didn't come in until 11,400. Other than dairy prices, and then we come into the States, we have Canadian export and imports, and that's going to be, other than Joe's jobs openings at 10 a.m. Eastern, that's going to be the, I guess you're going to call it the key piece of data in the States, U.S. related, Joe's job openings, and then Canadian import-export. As I said, here's a 2-day VWAP, but they actually found a bid as S&Ps hit their 2-day VWAP, and then we saw pretty decent bit of volume step in, so would suggest that we may have a low in place and we kind of come off of this a little bit, not huge, but slow down the selling. And we'll go and take a look at the news. Australian and New Zealand dollars left behind as easing expectations drag. The Australian and New Zealand dollars crept higher against the greenback and yen on Tuesday, but lagged a broader rally in riskier assets on the prospect of further monetary easing. The Australian dollar briefly flicked above 72 cents after the RBA left rates on hold as expected, but gains were short-lived as the central bank made clear that the further easing remained under construction, or under consideration, I should say. The Aussie was last at 71.87, more or less where it began in the Asian session. New Zealand dollar edged up to 66.49. Both currencies briefly hit a 2-week high against the yen. Overall, the RBA statement doesn't reek of any urgency to react or act, said Westpac analyst Sean Callow. It has a mixed commentary about things that could have been worse. They're getting better, but we know that they're still bad. He said perhaps tempering bets that easing could come in November. The RBA noted improvement in the outlook for the unemployment in Australia and now expects a peak below the 10% level that it had forecast in September, but still said it continues to consider how additional monetary easing could support jobs. The Australian government is due to release its federal budget later in the day and expected to boost spending to support jobs and stimulate growth. The Antipodean's message, Antipodean's merge gains have lagged. Global rebound in risk assets and a sell-off triggered late last week in the Trump's COVID diagnosis. Analysts said the caution about the outlook, with plenty of uncertainty ahead of a U.S. election, to wobbles in the economic rebound. And that was capped optimism along with the firm easing bias of both the RBA and the Reserve Bank of New Zealand. Bond markets tracked rising U.S. yields, but the anticipation of further RBA easing kept downward pressure on the Australian yields at the short end. The easing bias is still very much there, said Chris Weston, head of research brokerage Pepper House in Melbourne. The market's anticipating a lower yield curve could target at some stage. And the U.S. fiscal stimulus hopes lift risk appetite. The dollar was on the defensive against most currencies on Tuesday as rising optimism that the U.S. lawmakers could agree on new stimulus to blunt the economic impact of the coronavirus Dampened demand for the safe assets. Risk appetite also improved after Trump left hospital and then returned to the White House following treatment for COVID, a development viewed as reducing political uncertainties in the near term. The lead taken by Trump's presidential opponent, Joe Biden, in electoral polls ahead of next month's election is also seen as negative for the U.S. currency. The increasing possibility of a blue wave, which is a Democratic control of the White House and Congress, that would open the door for much needed fiscal stimulus, would be a welcome development for risk assets and could undermine the U.S. dollar, said Lee Hardeman. Yeah, this is gaining some traction yesterday. This whole story where there could be a blue wave and they're looking at as a positive for risk assets, and that we would see a lot more stimulus. And of course, that would weigh on the dollar. An index which measures the dollar against a basket of currencies was down slightly at 93.39. British pound was at 29.91. Euro at 17.92. Of course, we saw it at 17.78 earlier when we opened up the show. U.S. House Speaker Nancy Pelosi and Treasury Secretary Steve Mnuchin spoke by phone for about an hour on Monday on coronavirus economic relief, and we're preparing to talk again on Tuesday, continuing the recent flurry of work towards a deal on legislation. White House Chief of Staff Meadows said there was a potential for agreement among lawmakers in Washington on more economic relief, and that Trump was committed to getting the deal done. However, renewed efforts in Congress to reach an agreement on relief funds for the pandemic-hit economy has complicated the spread of the coronavirus among the policymakers, including Trump. The president returned to the White House after a 3-day stay. The market has been nervous about the possibility of a contested election, but it appears Biden is widening the lead, thus reducing the chance of markets not knowing the results of a long time. The currency strategist, chief currency strategist, said Yujiro Goto. Yeah, the lead or the polls appear to be widening even further for Trump, which is potentially, if we do see like a blue wave, could potentially dispel any concerns. One key thing is, and it's still close, although Trump's leading, is like in here in Texas. Texas hasn't voted Democrat since 1976 in a presidential election. So if Texas were to win, if Biden were to win Texas, that's it. That ends it right there. There's literally almost impossible for Trump to even win. So it would be also huge. If he were to win Texas, that would be absolutely huge. The first time in decades, forget it. Then there's no chance that Trump could even win with the Electoral College. So, and then something so huge like something like that would basically not only be a cherry on top, but would dispel any concerns about. He would probably still be arguing that this ballot, that ballot, and all this, but it'd be just essentially a non sequitur if Biden were to win Texas, and it is very close. I think Trump might have a 2-point lead, but it is very very close. And of course, there's other states are also close. Arizona, Biden has been held a consistent lead, so that was red before. Looks like that's going to turn blue, but once again, if he were to win Texas, that'd just be absolutely huge and would dispel any concerns. And so this widening in the lead in the polls by Biden is calming the markets. So with that, we're going to move into the analysis. So let's go and move into the analysis. Now, yesterday, we did have our bias chart resistance 1787. You can see the euro closed just a hair into that, and that kept it pretty much in check. We did expand it, and yesterday I was saying in the chat room, if we were to get beyond that, the next resistance would have been the 1806. But I wanted to expand that because we did see a solid close, and the momentum does push towards that. We can see it pare back a bit, possibly. I think we're a bit of a mixed bag anyway. That being said, sometimes with currencies, you'll see an extended move into Monday, and then it rotates lower on Tuesday. We shall see, but I did expand this range to the upside just in case. So that being said, the euro closed at the bias chart resistance of 1787. This was the highest close in 11 days. So they certainly have the momentum going its way. For Tuesday, resistance will be 1818 with support of 1712. So we could still push higher. Putting it at 1806 to me would not have been enough. So realistically, that resistance would come in at 1818. And support 1712. So cable closed at its best level in 12 days. Resistance on Tuesday will be 30.25 with support at 29.20. We're trading a tight range right now. Moving into the Aussie dollar. So the Aussie closed positive on Monday in a tight range. Resistance on Tuesday will remain the same as it was, 72.42 with support at 71.13. You can see that. So no changes. Still trading in a tight range. Moving into the Kiwi. The Kiwi closed slightly lower on Friday. I don't know why this doggone it really ticks me off. But this would have been the same. There had been no changes here in the Kiwi. And that had been 65.77 with the upside at 66.85. So no changes here. As was the Aussie because they're just in tight range. So the dollar CAD closed Monday at new 10-day lows. Support on Tuesday will be 32.08. So I did open up this range lower to allow that to, expand it. So far, it's just trading a tight range, but I did open it lower with resistance at 33.34. You can see that resistance there. Moving on to the peso. So the dollar peso went to a new recent low on Monday at 21.29. Support on Tuesday will be 21.24, which is 78% of this entire move. Resistance will be 21.48. Well, we've already got it up here to 21.54. We'll go with that 21.54 because that was, I think previously last week we did use that as what you call a support level, which obviously it's even blown further beyond that. So we'll go with the 21.54 on the upside, and on the downside, it looks like it's going to hold here, but I'm going to stick true to, although I think we've already gone, we've fallen so far. It doesn't seem like we're going to turn around and rush all the way back down, but I'm going to leave it anyway. So 21.24. Although I mean, look how much we've fallen. It's just huge. I think we are a bit overdone, to say the least. The dollar yen closed at the best levels over the last 15 days. Resistance on Tuesday will be 592 with support at 520. And on to the cash flow index. Once again, we're just on the little bit lower side, but quiet trading. The dollar index closed lower on Monday. Support on Tuesday will be 93.24 with resistance at 93.87. I mean, the levels are laid out for you. So I don't see like this. And when we're trading in a very tight range, we just took a little bit dip here. And that's why I mark off these levels. It's pretty clear as a bell. Okay, so we're trading tight range. We did dip a little bit lower. There's your resistance, and we've been talking about 93.24. If it loses 93.24 on a sustained basis, we'll be going a whole heck of a lot lower. And I think you do have to be worried about that because I think that if, as they said, right now they're looking at the polls for Biden widening further out. And so that's actually going to be considered now bullish for equities because a couple of things. One is that with them being widening further out, and we're looking at a potential big move, that will dispel many of the concerns of a contested election. Another thing also is that if the Democrats do take control, they're expecting a lot more stimulus, and with that will open the door for a rally in equities. And that would be bad for the dollar. So, I mean, I think we would take a turn and drop down lower. Let's go and move into the cross rates. So we did make this run up in here. We've kind of just stymied a bit, but once again, it's quiet across FX, so there's not a whole lot happening. And so we had 70.74. That's going to remain the same. 69.37 on the downside, same thing. No changes here in the Kiwi yen. We'll probably see this across the board. Let's go to Euro yen. Saw a nice little move here yesterday. Look at that. And we're just gently paring back. We did have 24.11 with a blue past that and also made up to 24.60. So that's going to be the resistance at level here right there. 2460, that will be resistance, and it's kind of held it in check. I mean, we got above it, 2471, but overall that 2460 is going to hold it in check. We did get past this 2411 yesterday, so they put on the gas yesterday. It'll be 2460, and on the downside, it would be the open right there, which would be 2349. Moving on to the euro odd. Nice solid rebound here. Very nice solid rebound. I mean, and then some follow through. Although we did run out of gas, you can see that the resistance is going to be right here. The open here coincides with this low and this low. So that comes in right at 64.73. It did overshoot it a little bit, but will be 64.73. And support, it's going to be right there, this high, right there. Should be 63.62. That's actually where they went to. But I don't think we're going to come back down again. But right there, you see right there, the high? So 63.64. Let's go and move into the Euro Kiwi. A little bit of push here after a solid rebound on Monday, and then we kind of ran out of gas, flamed out. And once again, you're going to look at the highs here, right there. You see that close? Right there, and that coincides right here with that high. That's going to be 78.08. Didn't make it up there, but that would be the bias chart resistance. And support right there, which would be 76.56. Guess we can actually make it right here in this bar right there, 76.72. That doesn't make any sense. 76.69. Oh, onto the LCN. Pushed a little bit hard, but boy, we have really turned negative all of a sudden. Look at that. Resistance, you see this low here, right there. And actually, that's where they ran out of gas, but I wouldn't have put it there. I would have put it right down the open, which would be 76.23, although they did run out of gas right at the low bar. But it'd be 76.23 is what I would go with, which would be the opening. 76, let's call it 76.24. Well, we had 76.27, so we're pretty close right there. And support, well, actually, we're making a push lower. We'll have to go into a 2 hour to see if we can see something more definitive right there. Underneath right there, which would be 75.42. Let's now go into the guppy. Pretty good little turnaround here in the guppy, but we're looking on a 2 hour. Let's move into a daily. So they made it to 37.14. But look where they closed yesterday, above that. So resistance would have been coming in. I'll have to go to 2 hour to find out. Let's see what that would have been. Right there, the low right there, which would be right there, 37.70. It didn't even make it to 37.50, but that had been it. It had been 37.70. And support. This high right there, high mark, which would be 36.54. And finally, the sterling odd. Nice rebound in here and some follow through. You can see clearly where resistance is right there, that level, which it almost made it there, which is 81.77. And support right there, that low bar, 80.03. And that'll do it for FX. Did see a nice rebound here in NVIDIA. Look at that. Look on the daily. Well, actually, it's 2-hour charts, but go to the daily. There we go. Nice rebound here. Here we got 2-hour charts. Kind of like looking on the daily. See how we finish the day. Nice move up here in Apple. 116. Now that's, I'm not looking at the after hours, but look. Nice rebounds here. So expecting that stimulus. Tesla on the daily. Netflix. Nice close here, Netflix. Facebook. We're still, I mean, we just look like we're kind of like in no man's land in some of these. See here? Amazon too. So that's what we have. Thanks for joining us here in the European Crossover webinar. I'll get the bias chart posted, and we'll see you in the chat room.